K-Man, I'd like to ask you, a lot of people make New Year's resolutions, and, as traders, we all look back. We're looking at our P&L for the year now, and we all look back. Is there anything that you are, resolving to have your trading be even better next year?
Yeah, there's one thing that is firmly on in my plans, and which I'm going to work on, is to trade probably a bit less in between levels. Um,
Okay.
I've had a little bit of stuff going into the bin because I wasn't patient enough. So even at our
Yeah.
age, Dale, we have to work on our patience there.
You know what? That's exactly, regardless of what the issue is. Like for me, patience, and it's one of my resolutions, is to be more like Steve Volge and, not try and be there for, although I should have tried it here, trying to catch the bottom because it was their level, is to be more patient and not care about being there at the turn and waiting for confirmation to confirm my bias
Yeah,
instead of, I guess it's a little bit of FOMO or ego that makes me think I could catch turns, because I do, but it's more of the exception than the rule. So if I'm more patient, I'll have less drawdowns, and I'm not really missing much by doing it. But patience is really still the key in everything. How
absolutely.
Yeah, so how about you, Blake?
First of all, K-Man, I think that's a great resolution. And, I think you are, or what you said is so correct, especially after years and years and years of trading. Is what happens, I think, with a lot of us is that because of our experience, because we've spent so much time in front of the computers, you think So you're like, oh, I've seen this before. I've seen the euro fiddle faddle around here, and it's going to naturally just go up to here. So I might as well just buy it between here and there because, it's naturally going to do
Yeah.
that because I've seen this song and dance. And then what you end up doing is just over trading and then, getting smacked around a little bit. And so I think that's a really, really great resolution for me. I think it's when I know I need to press, I need to be larger. Because sometimes, I sit here and I'll take like quarter and, third size positions because I am just kind of not, really, really super confident about the markets. And so when I see it, instead of being more than full size, I end up being like three-quarter size. And then of course I end up being right, but never in a big enough position that I should have been, knowing how much conviction I had. So in other words, when I have a lot of conviction, I need to know exactly where my risk is and then be confident enough to just, take the trade. And, if I get stopped out, I get stopped out. But usually my hesitation is like, well, I haven't been really confident recently. So instead of taking a more than a full size position, I'm just going to be like half size here or maybe three-quarter size. And then, and we always say it, and you can see it in the room when we always say, oh God, I wanted to be in, I knew that position was going to work out. And how'd you do? Well, I just wasn't as big as I wanted to be. So anyway, that's my New
Uh,
Year's resolution,
I
is
have a
step
little
up my size a little bit.
psychological insight that I think most people will say they experience. We're never in heavy enough when we're right, and we're always in too heavy when we're wrong.
Yeah.
And not just based on facts, just the psychology of when we're right, it never feels like we have enough on, and when we're wrong, it doesn't matter. We had too much on.
Yeah,
So, I mean, I go through that. Everything's in our heads, isn't it?
it
I mean,
is.
this whole business is all in our heads. And, I want to ask Mr. Discipline um, if there's anything that he's looking to improve on, Steve, in 2024.
And by the way, while you're bringing Steve on,
And
it looks
Grega's
like
here.
Grega just made it here, which is really
Yeah.
nice.
I want to know about Grega's plan too. So Steve, I don't
Hey
think he's
guys.
going to answer me.
Answer about what?
All right. We're talking about, is there anything that you're resolving or after looking back at this trading year that you want to improve on in your trading?
Um, that's a good question. Definitely not having to do with methodology, but definitely, on the other hand, having to do with, I think the last year I took less trades than I should. So
Okay.
this is what I want to do in the year ahead. Take a few more trades.
Okay. All right. So there, see? So no matter how long you've been doing this, guys, we're always still growing and improving. So Grega is here. So Greg, I know you probably want to talk about some markets here, but when you look back at this year and you're looking ahead in 2024, what are you looking to do to improve your trading?
Actually, what I noticed over the last few months that I, based on my principle, based on my trading approach, I can catch some really nice directional moves and project a nice potential move on the market. But when I take a trade and when this market unfolds and when I look back, I really think that I should increase my size more confidently. So somehow I'm fine when I enter the trade, but when I look back and trying to go through this trade, and when I compare it maybe with my previous losses, then I think that I should really have to do much better, much more with that trade. So recently I was looking to add to my position when the trade was working in my favor. So what really has been doing well lately for me is that whenever I'm going well with the trade and when I pull my stops higher, I use this margin for next potential entry to add to this trade with a smaller size, obviously. So at the end, I still don't risk too much when I make the total
Yeah. So you're adding in a market that's working for you.
Yeah, but of course that's for the trades and on the markets that moves. Market has to make some very nice sizable moves. Obviously, for the last 2 weeks in December, that's not the proper trading plan, but that's something what I'm working on it.
Isn't that something, guys? When you think about it, you talk to the general retail public, and most of them will say they overtrade. And I guess, so an interesting observation that everyone in here has, decades in the market. And maybe because of our experience, and we've seen and experienced so much and not always great stuff, that it actually instills a little fear and caution in us, where the guys who haven't been hit in the face yet or had their teeth kicked in are the aggressive ones. Don't you find that interesting, K-Man?
Yeah, it's all about
Not really.
I mean,
Not
being a trader, I still do it. I mean, the thing is, I think I've got an advantage and a handicap at the same time, and both come from the same experience. And my long-term experience as a spot FX market maker in banks, and I've got a lot of experience. I know. And I've got a lot of experience. I tend to have like sometimes a nose for things when they're going to happen. But at the same time, I've been used to trade hundreds, if not thousands of trades a day sometimes, being an FX spot market maker in banks for such a long time. So, and that is still a bit my handicap, I must say. I mean, I tend to, and I've even put it on my
It's your paradigm. It's your paradigm. It's your paradigm.
Yeah, I even put it on my Twitter handle just to remind myself that overtrading is not good. Cycling is a lot better for your health. and but I still sometimes do it. But the good thing, and that's probably the experience, is that I can judge my amounts and the size of my positions relatively okay, and that's likely the experience that that comes into play there, and that I think for a lot of traders is and it joins a little bit what Blake was saying as well, is that know the size of your positions when you have your conviction, when you have a speed of the move, when you have um
Confluence, all the things that don't
yeah,
usually set up for everything.
that come together.
Yeah.
But it's a constant process of revisiting what your thoughts are, testing your thoughts compared to what the price action is. But more, I wouldn't say in the 15 minutes or 1 hour or so. That's more a process of um, what's happening these days, what's the theme of the month, if anything, what's the overarching themes in the market. I mean, it's a constant work. I mean, and that's something which won't change as unless we have a robot running it for us. But since we're all live traders and doing it ourselves, that doesn't change. We have to put in the work, and that is will never change.
Yeah. Well, I think that it's commendable that everyone I'm talking to has been able to make the transition, because I think Ryan would attest to it, having been on the trading floor, and probably you too came in, that a lot of people couldn't make the adjustment to off the floor or off the desk trading their own personal account, because it was different down there. They didn't have to be right. They just had to trade the flow.
Yeah.
So, I think that, a lot of guys who were very successful in those areas were not able to make that adjustment to
Oh,
trade
there's a
off
lot
the
of
floor.
them. There's a
Yeah,
lot of them. I know a lot of.
they become like hosts and anchors of podcasts.
Yeah. Oh, one. Yeah. Yeah. For one, but
Anyway,
they're also a bit prisoner of their former job.
yeah. All right. Well, anything you guys want to add to that? I think it, lets our community, our viewers know that, it's something that they may as well accept, that they're always going to be challenged. And it's not like you have the answer if you're a discretionary trader. Um,
Yeah, I
money
think
moves.
the important takeaway is, if you're listening in here and you're kind of reflecting on 2023, and you're listening to guys like us, we're always working on our process. It's a constant grind. If I was also thinking about this for some of the traders that have taken a couple of weeks off. For me, trading is not like riding a bike. It's not like I can just jump on a bike and just go pedal around. When you take a couple of weeks off, let's say you were taking a couple of weeks off for the holidays, you kind of got to take a step back and re-engage your mind, see where everything's at, understand why things have moved the way they've moved. If you just, jump in front of the computer, so like, let's say you just got back from a trip, and you're like spent the Christmas holidays or holidays somewhere else, and you're like, I'm back home for New Year, I'm ready to kick things off. It's important not to just jump in the markets and start trading at these levels. Pay attention to what's been going on, do some research, get
It's like
familiar
you have
with
to
your
catch
charts.
up, right, Blake? It's
Yeah,
like
yeah,
you
exactly.
have to go watch the movie you missed,
Yeah,
right?
exactly. Yep,
All right.
yep.
Anyway, let me tell you something. A lot of pearls out there. This video, I think, would help a lot of people if they listen to it, because there's a lot of blood, sweat, and tears that went into these answers. So why don't we talk markets now? I know, Grega, you're here. You probably have some
Yeah,
stuff you
that's
want
what
to
I wanted
show.
to say. We rotated this week. I think Grega's charts is the thing we haven't seen yet.
Okay, well, that's what we're doing now, buddy. So, Greg, I'm going to stop sharing. You've got the controls. Thank you, Mr. Producer Volky.
Where is Grega? Did he just disappear?
Grega,
Oh, there he
Grega?
is. Okay.
there,
All
right
right.
here. Okay, we got
You're
you
still
up there.
muted, Grega, you're muted, by the way.
Okay, now better.
Yes.
Okay, so as you know, I'm working on some charts like at the end of each year to look more in what may happen, what may unfold in the next few months. So here I'm looking probably at the most important charts. We still assume that rates, obviously, and because of inflation, will be the most important drivers for these markets. And looking at this chart, we have the Thomson Reuters commodity index at the top. Then we have the US yields here at in the middle, and at the bottom we have dollar index. So what I'm looking at here is commodity sector, in my opinion, is still in a corrective phase. I'm expecting more weakness going into 2024. I also think that crude oil is now just consolidating, and that we will see also maybe move below, even below $60 per barrel in 2024. So with that in mind, I think that this ABC corrective pattern is also incomplete. I'm looking for more weakness here. And of course, on the other hand, this would most likely drag the US yields, be a reason why the US yields would probably see even more weakness. There are obviously expectations that Fed maybe at some point could even cut the rates if inflation comes below 2%. So I think the dollar will stay in this downtrend. I think that we have room for 96, 97 area for the first few months of 2024. So for now, my whole story is that dollar weakness can resume even further. The main or the most important wave count is still the US yields. We have completed this 5-wave rise. We are now coming down, trying to break this lower trend line of this Elliott wave channel. Okay, so notice that I connected the channel from the end of wave 2. So whenever you draw the Elliott wave channels, you should draw the lines from the correct same levels of the same degree. So I'm looking from that point here from August 2020 to this April of 2023. Okay, so now we are testing this trend line. We came quite aggressively here to the downside. We see bearish impulsive characteristic on a smaller time frame. So I think that that's still the first part of minimum 3-wave drop. So this first leg to the upside is now completed. It's an impulse. That's a very trendy, very strong movement. So of course, we expect that at some point, maybe this trend will resume. But before that, market should firstly complete this corrective setback. And I think that this corrective setback would unfold in 2024. So corrections can be sometimes very simple, like an ABC, sometimes can be very complex, very tricky. But since we have a very clears the beginning of this correction because it's a strong movement, I think that can be a simple correction, maybe a zigzag, but even zigzag needs to be made by 3 waves. So we have only first leg so far, so maybe some consolidation for a wave B, and then eventually I would be looking for more weakness here, maybe even down to 3% in 2024. So this tells me that dollar should either stay sideways or even bearish, but I'm leaning more towards bearish view if the US yields would really see that push to the downside in the next few months. Also, what I want to look at is, let me bring this chart on. Okay, so what we are looking here, I'm looking here at the top, we have the plenty FX currencies versus the S&P 500 here, black in the middle, versus the US yields in red and the dollar index. So actually, I'm comparing the FX to these major assets going back from back to October of 2022. That's when dollar index found a top. Okay, and notice that since then we are actually seeing that Aussie and Kiwi are not that strong, right? And that CAT is also in the same position here. Mexican peso has been doing very well, but on the next slide you will see from that red line that now commodity currencies such as Aussie, Kiwi, and CAD are now trying to pick up the strength again. And that's since Fed gave us indication that they are actually really done with the hiking rates and that may actually can do cuts in 2024. So now this chart from that red line shows that Aussie, Kiwi, and Kiwi are trying to pick up and trying to make back what they lost before. So I think that this tells us a very nice potential, sets up a very nice potential scenario for more gains of Aussie and Kiwi, which could do very well in 2024 if current risk on mode will resume. So I see some very nice also bullish patterns on both of them. So if we take a look firstly on Aussie dollar, okay, so here we have Aussie. Here's firstly weekly chart. We can see that very big swing to the downside happened in October 2022. We bottomed at the 61.8%. Then we have seen some recovery, but more importantly, this substructure was again in a corrective manner. It was in 3 waves. And now we are breaking this trend line with a nice bounce over the last 2 months that we are seeing, or 3 months. And I think that this current bounce suggests that more upside could be seen in 2024. So based
Grega,
on,
can
yeah,
I ask you if it came back to check the breakout of the line that it just took out, where that would be?
deadline,
Yeah, if it pulled
uh,
back to that line.
pull back to that line,
Yeah.
then we can actually check this one here. If we retest this line from the outside, that would be around
Okay.
65.50.
Around the last low that we had at 5 1/4.
Yeah, around there. Yeah,
Yeah,
exactly.
yeah. Thank you, brother.
Welcome. So I'm looking for Aussie to continue higher. Of course, there can be some pullbacks, maybe like Blake said, now 65.50 could be the first interesting support. Nothing will move in straight lines. There will be some position adjustments at the start of the new year because some will be looking maybe to take profits at the start of the new year to avoid tax for 2023. So of course, there will be some volatile weeks, I believe, at the start of 2024, which could potentially cause some pullbacks, but eventually we will see a continuation higher. So if we really see some retracements, I think that there can be opportunity on the upside. So I think that 720 could be interesting upward projection, at least for temporary time. Looking at also at Kiwi, this one is also making some very nice recovery. So here we have this daily chart, very nice strong move to the downside. We've been tracking this correction, this pullback that bottomed at the 61.8%, also at this lower trend line of this corrective channel. Now we are already trying to break this upper trend line. So now we have even 5 waves up here when tracking from October lows. So of course there can be some corrections. Hopefully we see a corrective setback because this would allow us to join this current trend that I think will show up still in 2024. Let me check also maybe the S&P 500. So the S&P 500, I think it has room for to break above 5,000, 5,200, 300. That's the potential target. But notice what I'm looking at. Actually, despite these upper targets that I'm observing, I'm still think that this rise from 2022 lows can be corrective, but that's fine. Okay, even corrections can last and can unfold within uptrend if they are part of a complex correction of irregular correction or something. But let's not get too deep into this. The most important is that even if this is ongoing corrective rise and corrective moves are made by 3 or 7 swings, okay? If that would be only a 3 wave swings, then corrective wave B would be finished here. But because we have seen this overlap after wave X pullback, it looks like that this is now the 7th swing correction. So you have the first simple correction ABC, you have wave X that connects or it's the middle point or connector with the second correction that is now underway. So that's why this is called a complex correction. So we have to see more upside. That's now the first leg of unfolding structure that should be made by 3 waves for an ABC structure. So I think that more upside can be seen on the S&P 500. Even with this somehow conservative approach, I still think that there can be more upside after the pullback. Now around all-time highs here, we know it's a little bit tricky, risky, and not really good levels, maybe to jump into long side straight away. Just watch out for potential failure breaks, then a pullbacks, and then try to ride this trend. So I think that if we see some pullbacks here, it could be very interesting. Also, weeks is still at these lowest levels here around 12. So of course, there is room for much more downside here, but I think that maybe some volatility in the short term could potentially spark some sellers here on the S&P 500. So the idea is still within a bullish channel. We are staying bullish, but we are aware of this wavy pullback. So if we see this retracement, I think that after this retracement, there's still can be a lot of opportunities on the stock market. At the same time, I would anticipate the dollar obviously would move even lower. Let me just trying to remember if I have anything else.
Grega, I just wanted to mention, you know, for those of you that, and I'm assuming most of you that listen in here are going to be listening into the week ahead video. Greg is also going to be putting together a piece for the week ahead video this weekend. So just so you all know that.
Yeah, I will do that for sure. So I think that basically that's it. I'm not really sure if it's anything else I want to share right now.
Well, that was great.
Because on the smaller time frames, I really didn't track the markets much this week. Actually, I was in bed through Christmas holidays. I got a flu, so I really didn't track markets at all these days. So I'm just back today trying to put the markets and charts together for the week ahead.
Happy New Year, Wizard.
Thank you. Happy New Year too, and everyone in the team, and to everyone who is listening.
Happy New Year, Grega.
Happy New Year, Grega.
So Dale, I you know, today is basically the last trading day for us. I want to real quick just go over something. Not so much for the charts because we're end of month flows or end of month, excuse me, end of year flows. K-Man probably has a few words regarding the end of year, but I also want to mention we actually, for those of you that are looking to be part of the ForexAnalytix community, we, for the first time in a long time, we're doing a New Year's offer, and that offer is a steeply discounted subscription price, and we're going to be offering it for a week. We want you to take advantage of it. We usually do this like the second or third week in January every year, but we pushed it forward for the New Year's because we wanted you all to take advantage of it. Plus, we have some really big things in store for you over the next couple of months. So we kind of wanted to, get anybody who wanted to be involved in the community. This is the time, because we only do pricing discounts a couple of times a year. So it's going to be for the next week. So kick off the new year right with the ForexAnalytix subscription, and get in on your discounted prices this week, because like I said, we usually do it January 15th or so, but we're doing it the first week of January this year. So take advantage of that. K-Man, did you want to talk really quick about end of year flows and what we might be looking for as we go into the end of the year?
Yeah, okay. I think we've seen exactly what we could expect, and there's a few currencies that have been really outperforming the rest. I mean, the main theme has been dollar selling, of course. That we had been talking about that already a good number of times. And so being the last day of the year, there could be some more to be done because a lot of asset managers, FX neutral funds are benchmarked with their FX outstandings on the last rate of the 4 p.m. London fixing. So there may be a few more things to be done. What we saw though overnight and yesterday is that some of the currencies may sort of be done. And I'm thinking about overnight we saw a bit of demand in the Aussie and the Kiwi, but that has been much less, and it has actually been reversed. So those may be done, but there may be a bit of leftovers in stuff like Swiss, for instance, which has really been one of the stars of the end of this year. Also, we've also got the Scandinavian currencies which have outperformed. We haven't talked too much about those, but they have really been doing quite well, especially like dollar Norway came back down a lot over the past week and a half. Yeah, that's about it. I think we just have to be very careful with what is going on this afternoon, because
when's the next big flow that you're expecting for today?
Anywhere so within, I think it could actually start right now, but I'd say watch the last hour. So the next in 1.5 hours, and then for 1 hour, it's going to probably be decisive for all those flows. By the time come 4 p.m. London, that is in about 2.5 hours, most of it will be done. We may see some reactions on afterwards, because there's always going to be front runners thinking that they know what they have to do, or banks or so, and we could see a bit of a snapback right after 4 p.m. London time, so in about 2.5 hours. But then after that, I suspect the liquidity will completely dry out. So we still may see moves, but they will be really, really very random.
Yeah. Okay. Thank you. Thank you very much. First of all, Chris in Tokyo, who's one of our traders in our community, he said, Grega, your commentary is always so helpful. Thanks for doing that, even when you're not feeling great. Happy New Year. And that's Chris in Tokyo. And that Chris is, like I said, he's in the ForexAnalytix community. And good to hear from you, Chris. Patrick said, I heard of a large dollar short. Do you see a squeeze event? Thoughts? And my gut instinct right now would be like, don't be looking for it today. But what do you think about that, K-Man?
Well, I mean, if there is a large dollar short, they may as well take advantage of the fixings then, if they are dollar sellers, to cover it, because after the fixings they won't have an ounce of liquidity anymore, and they may as well wait for next week, right?
Yeah, exactly.
Yeah.
Well, it's interesting. The dollar has been under pressure over the last several weeks. We've seen, like the triangle pattern play out. Actually, I think yesterday might have been the completion of the squeeze out of the triangle, but doesn't mean anything technically, because just because we did complete it and maybe a little overshot it, flows are still going to be dominant with very little liquidity. So just be really careful about trying to trade today.
If I may, one last currency that people may be a bit careful about is the yen, because yesterday we saw that big run into yen, and that ended right before the 4 p.m. London fixing, and overnight, actually the Tokyo fixing was the other way around. They were rather buying the yen. So be a bit careful if you're in yen, because it could get a bit funky as well if expected flows are done and not to happen anymore.
Right. Okay. Well, Dale, I think this wraps us up for 2023. I want to say thank you for being our host and valued original team member to the ForexAnalytix community since the inception. And it's been a wonderful year with you. It's and with the team, obviously, as well. And I really am looking forward to 2024. I think 2024 is going to be the year of volatility, especially in the FX market, with interest rate expectations changing quite rapidly, and the divergence between monetary policy between regions of the world, I think, is going to create so much volatility in the FX market. So I'm glad to be in this in this battleground with you, my friend.
All right. Well, thank you so much, Blake, and the whole team. Happy New Year. I hope it's a great year for you, not just on your P&L, but every area in your life. When those pop up, it makes our trading look less significant. So, lots of health to you and your families, and also to our community. Hope that you guys are benefiting from what we're sharing with you. It's our mission statement to build up and edify traders every day. So we did it for another year, and the team has never been stronger. Thanks to some great additions, K-Man and Ryan. I'm thinking of especially have really added a great dimension. The Flow Show. We got a lot done this year, guys. So
We did.
let's keep rolling. As Blake says, that's how I roll. All right.
Thank you very much, Dale.
Happy New Year, everybody.
Happy New Year,
Happy New
everybody.
Year, everyone.
K-Man, Steve, Grega, thank you.
Yeah.
And Jane listening in.
Enjoy.
Happy New Year, everybody.
See you guys.